cybercrime expert. German leader seeks energy deals alliance on Gulf trip. And why does Tesla stock remain resilient? Are layoffs at a small cap tech a bellwether for housing stocks? Will CrowdStrike get a boost from increased EPS guidance? Hmm, Are these liquid natural gas stocks ready for an upside bounce? Okay. First, will Wall Street's enthusiasm about Datadog lead to big gains? Datadog handily beat earnings and revenue views in its most recent quarter. Wall Street expects strong earnings growth for the full year and for 2023. Despite analyst optimism for the long term, enthusiasm was temporarily muted because the company only guided in line with expectations. Cloud monitoring specialist Datadog has been the subject of analyst enthusiasm recently, at least for the most part, according to data compiled by MarketBeat. On Friday, Credit Suisse initiated the coverage with an outperform rating. Datadog. Okay. On Friday, Credit Suisse initiated coverage with an outperform rating. Earlier in the week, Moffett and Nathanson analysts certainly already opened the coverage with a buy rating, a price target of $143, representing a potential upside of 51%. Also, middle market investment bank Robert opened coverage of the stock with a rating of outperform and a target of $120. The only outlier in terms of a new analyst coverage was a JP Morgan Chase, which began coverage with a rating of neutral. The stock has lost ground since reporting its second quarter on August 4th. The company reported earnings of $0.24 per share, up 167% from the year ago quarter. Hmm. The company posted earnings growth between 80% and 300% the past 5 quarters. Revenue grew at high double digit rates in the past 8 quarters. Here it is. Three cloud stocks that could go parabolic. Not to sell off two high growth tech stocks you will regret not buying on the deep. Hmm. 12 expects to grow its revenue by 30% organically through 2024 while expanding its gross margins. JFrog could generate more than 30% sales growth for years to come as it expands Artifactory's ecosystem. Datadog remains one of the market's highest growing cloud stocks. Datadog. Let's look at Datadog first. Cloud-based platform pulls diagnostic data from a company's entire network of databases, servers, desktop software, mobile apps, and cloud-based services. Pulls diagnostic data from a company's entire network of databases, servers, desktop software, mobile apps, and cloud-based services, then aggregates all of that information into a unified real-time dashboards. That streamlined view makes it much easier for IT professionals to diagnose problems. Hmm. Datadog went public 3 years ago, and its annual revenue soared 83% in 2019, grew 66% in 2020, and jumped 70% to $1 billion in 2021. Expect its revenue to increase another 56% this year. Those growth rates are impressive, but Datadog stock still plunged nearly 50% this year as investors fretted over its declining operating margins, which were squeezed by higher R&D sales and marketing expenses. Investors were also concerned about its sequential loss of large customers. last quarter, which it blamed on slower spending from e-commerce, food, and delivery companies in a post-lockdown world. Datadog isn't profitable by GAAP measures yet, but it's stayed profitable by non-GAAP measures since 2020. It expects its non-GAAP EPS to grow 54% for the full year. Its stock still isn't cheap at 18 times this year's sales. Its stock still isn't cheap at 18 times this year's sales, but looks more reasonably valued than it did last year. And it could command a much higher valuation if the macro situation improves. Okay, Datadog, we'll have to look at it. Mm. So basically, this is what it is. We have a lot of data, right? Server, mobile apps, and cloud-based services. They pull all of that. They pull diagnostic data from everything, literally everything, and then they aggregates all of the information and into a unified real-time data dashboards, real-time dashboards. Mm. Datadog lead to big gains. Mm. So what's the bottom line here? Although it went public just 3 years ago, Datadog's market cap of $28 billion puts it among the top enterprise software makers in terms of value. It trails Salesforce, SAP, ServiceNow, Snowflake, Workday, and Shopify. There are dozens of industry peers with lower valuations, including some well-known names like Asana, Twilio. It's a fairly new company that's in growth mode and one that institutions have confidence in. Datadog is a good watch list candidate for the next market uptrend. Okay, next one, China using civilian ships to enhance Navy capability reach. Using civilian ships to enhance Navy capability. A Chinese scientific ship bristling with surveillance equipment docked in a Sri Lankan port. Hundreds of fishing boats anchored for months at a time among disputed islands in the South China Sea, and ocean-going ferries built to be capable of carrying heavy vehicles and large loads of people. All are ostensibly civilian ships, but experts and uneasy regional governments say they are part of Chinese civil military fusion strategy, little concealed by Beijing that enhances its maritime capabilities. China's navy is already the world's largest by ship count and has been rapidly building new warships as part of a wider military expansion. It launched its first massively designed and built aircraft carrier in June. At least 5 new destroyers are on the way soon. Okay. Able to use not nominally civilian vessels that are clearly state directed, state paid to it away the sovereignty of its neighbors, but then plausibly deny that the state is responsible. Hmm. Okay, I get that. China, they're like using mixed strategy. They know that using army uh, in the sea is forbidden. So what they come up with is using civilian ship. Well, it's technically not civilian ship because uh, in that ship, armed forces are in it. So that's the way to do it. China using civilian ships to enhance navy capability. They're already like top tier. Like they got great workforce, great was it military force, but then it's enhancing it uh by using civilian ships. Okay. German later six energy deals alliances on Gulf trip German Chancellor Olaf Scholz is traveling to Middle East on Saturday for a two-day three-country visit aimed at striking new energy deals, mhm, forging fresh alliances amid the economic and geopolitical turmoil resulting from Russia's invasion of Ukraine. The German government has a scramble to win Europe's biggest economy off Russian oil, coal, and gas since coming to office last December. While imports from Russia have declined sharply since then, there are fears that Germany, like other European countries, could face an energy shortage in the coming months. Mm. So basically, it's not only Europe, like Germany in this case. They're afraid of a shortage of natural gas and oil, so they are out there. They're looking for it because otherwise they'll be in trouble, right? A lot of products can be made with natural gas and oil, but without it, it's really difficult, right? So, mm. Bridging the net gap in natural gas supplies is a particular concern, and one of the reasons Schultz is heading to Saudi Arabia, the United Arab Emirates, and Qatar together with a high-level business delegation. Senior official said, "Okay, why does Tesla stock remain resilient? Amid a sell-off, Tesla remains poised to see significant gains. Ford has raised prices to offset a rising material cost. Will Tesla? Okay, um, these days a lot of material, the cost of material has increased. So Ford has basically raised the prices to offset rising material cost, rising material cost, right? The short ratio of a Tesla continues to be optimistically healthy, indicating a future upswing. Mm. Okay, let's see. Tesla continues to remain resilient despite the broader market sell-off, despite predictions of demise by short sellers. And despite these predictions, the stock is up 16% for the year and continues to trade at relatively lofty valuations. The stock was down 4% during early trading hours on Friday. So people were like expecting to see downgrade of Tesla, but then at the end, what they see is uptrend of Tesla. And why is it so resilient? It's their new concern because well, not concern, but like people are like, why is it? They're curious as to why it's happening. Unlike other companies that are going through, hardships and like having a downward trend. Unlike them, they're like doing really great. So okay, Tesla should see significant gains in that latest quarter, with August sales estimated to be over 100% year over year, and with China sales expected to be around 77,000 vehicles in August. Things seem to be back on track after a small hiccup in the previous quarter. Meanwhile, Tesla is expected to have doubled its market share in the US to 4%, with sales doubling for the month as well year over year. Tesla in general has seen strong uptake in many countries, including the likes of Australia, although results in Europe have been mixed. Should the next quarter's results come in strong again, Tesla could see its stock rise once again, going against the general trend of tech stocks. Should the next quarter's results come in strong again, so here is if next quarter's results come in strong again, they could possibly expect to have hmm, their stock rise once again. Um, okay. Our layoffs at a small cap tech a bellwether for housing stocks. American Homes Rent has a moderate buy rating for some interesting reasons. Let's keep on this one. Are these liquid natural gas stocks ready for an upside bounce? What is it? Even as the energy sector outpaces the broader market, liquid natural gas specialists like Cheniere Energy are among the sector's leaders. Houston-based Cheniere is up 8.36% in the past 3 months and up 38.26% year to date. The stock got a boost from its quarterly report on August 4th and is up 16% since then. Revenue growth has accelerated in each of the past 5 quarters, from a 14% to 165%. In addition to the strong price appreciation, hmm, the stock pays a dividend. The company introduced a dividend of $0.33 per share in 2021. The current yield is 0.79%. That's not much to write home about, but the company also has a share buybacks program, which can increase the shareholders' value. Hmm. Hmm. Liquid natural gas stocks, okay. Get that. Mm, hmm. CrowdStrike, Datadog. Let's read about Datadog one more time, okay? The digital transformation is ongoing, yes. And more companies than ever before are relying on cloud-based systems. That can be a double-edged sword, however, as downtime can result in lost customers while wreaking havoc on employees' productivity. Diagnosing issues and raising the red flag before these problems reach critical masses of paramount importance. And Datadog is on the hurt, diagnosing issues and raising the red flag before these problems reach critical masses of paramount importance. The company's integrated software monitors cloud systems, servers, databases, tool services, and apps using a combination of monitoring services and real-time analytics to not only detect problems but also keep them from recurring. Integrated software monitors cloud systems, servers, databases, tools, services, and apps using a combination of monitoring services and real time analytics to not only detect problems but also keep them from recurring. Datadog is so successful at what it does. It's been acknowledged by Gartner's Magic Quadrant as a leader in application performance monitoring and observability for 2022. So, when people inside a workplace, they can detect problems. Of course, they be using a server. What else did they use? What else would they use? Cloud systems, database tools, services and apps, combination of monitoring devices. They be using a lot of things. They be using a lot of equipment, and with their service, they can not only detect problems, also keep them from recurring. Which is a good thing. So, in the second quarter, Datadog generated revenue growth of 74% year over year, accelerating from a 67% growth in the year ago quarter. The company isn't yet profitable, but it generates strong and growing free cash flow. This suggests losses are the result of non cash items, including depreciation and profits are on the horizon. That's more. Datadog's strong financial performance is buttressed by equally impressive customer metrics. Once customer roles grew by 29% year over year, the number of enterprise customers grew even further. As those spending $100,000 in annual recurring revenue climbed 54%. Furthermore, existing customers continue to spend more, as in Datadog's dollar-based net revenue retention rate, which has been 130%, or higher for every quarter going back 5 years. Hefty price tag. Datadog is selling for 13 times next year's sales. While that's Datadog's lowest valuation in years, it's still expensive by traditional standards. However, given its revenue growth, which is well above average, it's deserving of an above average valuation. Okay, let's pick some of the articles, okay? Mm. How to survive the worst beer market of all time. Inflation spending cuts undermine Biden's hunger policy. Tech valuations down to pretty reasonable levels. Slack founder. Jerome Powell just warned that the U.S. housing market needs a difficult correction so that folks can afford homes again. Goldman Sachs just lowered the S&P 500 price target. How low it could go? What? Walter Jeremy Segal accuses Fed of making one of the biggest policy mistakes in its 110-year history. 6 types of tech stocks that I like right now, and 4 that I'm wary of. Where the S&P 500 might be headed next. Block stock is beaten up, but some on Wall Street still like it. Stocks are sinking and rates are rising. It's painful, but we're heading for normal. Why Warren Buffett doesn't buy real estate and most other investors shouldn't either. Spook traders just piled in stock protection at record rate. Global rate hikes raise contagion risk beyond emerging markets. Here's where to look. I see that it's pretty much about inflation and how the Fed the action from a Fed, mm, what it would have, what kind of impact it would have on a market. I mean, that kind of thing is written. Uh, let's see. How to survive the worst beer market of all time. In Tom Wolfe's the famous essay about the 1970s, The Me Decade, he wrote about how Americans had abandoned communal thinking in favor of personal wealth. They took their money and ran, he wrote. Uh, in fact, there wasn't much money to take. Today, with the stock market in meltdown mode, it's natural to look back at other times of financial woe. The Great Recession of 2008, 2009, the bursting tech bubble in 2000, the crash of 1987, never mind 1929, and all manner of mini downturns and flash crashes in between. The one that gives me the most dread is the long, soul sucking slog between 1966 and 1982. In other words, the 1970s. The stock market went up and down and up and down, but in the end, went absolutely nowhere for 16 years. Why did the market go sideways for 16 years? Hold on. It just went sideways for 16 years, okay? Mostly it was soaring inflation interest rates. Monthly CPI climbed from a 9% in January 1966 to 13.6% in June 1980. Meanwhile, gas prices went from 30 cents a gallon to $1. Hmm. Forget about lava lumps, platform shoes, and Ferrari Foucault. To me, this is what defined the era. What can we learn from that time? So I see that starting from 1967 to 1982, uh, It's market goes sideways. Market goes sideways for 16 years. Market goes sideways for 16 years. Okay. Oh, okay, okay. Here is the point. Some of the takeaways for investors today are always true. Avoid both overvalued stocks and those of slow growth companies. It may also pay to own dividend yielding stocks and to diversify. And it's worth noting that if we do have some sort of repeat of 1966 to 1982, stock picking becomes more important, perhaps versus passive investing in index funds. It wasn't all darkness back in the 1970s. The disco balls lit up some stocks. You just had to look that much harder to find them. That's a likely scenario going forward as well. The nice thing is there were companies that did very, very well in that environment back then. Druckenmiller says that's when Apple Computer was founded, Home Depot was founded, coal and energy companies, chemicals made a lot of money in the 70s. Okay. So it's not about passive investing. It's more about picking. Um, if you pick well, then it's worth it. It's worth noting that what you pick is what you get at the end. Hmm. Next one. Inflation spending cuts undermine Biden's hunger policy. Okay. Uh, I'm gonna just read a few um the very first two paragraphs or something. Okay. Grace Melt made her first visit to the Nourishing Hope for Pantry on Chicago's North Side in August. Throughout the COVID 19 pandemic, she used the food stamps issued by the federal government to buy groceries while out of work for a knee injury. But this summer, the food stamps couldn't keep up with the grocery store's rising prices, sending her in search of a food donation for the first time. It's definitely not enough. It never lasted till the end of the month. She said of the food stamp benefits, and now they've increased prices. Now you have to resort to coming here to a food pantry to fill in. They're making exactly the same mistakes as they made in 2008. Hmm. Tech valuations have come down to pretty reasonable levels. Pretty reasonable, he says. Slack founder says it's a pretty reasonable levels. Okay. Tech stock valuations have crumbled as the outlook for higher interest rates and a slowing U.S. economy continue to hammer markets, but they can't keep falling forever. And Slack founder Stuart Butterfield hinted that pretty soon the valuations on great businesses will be too tempting for investors to ignore. Hmm. Okay, so it's really tempting because its price is so low. Oh, it's attracting it's gonna attract a lot of investors, right? The multiples have probably come down to something that looks pretty reasonable. The longtime tech industry executive told Yahoo Finance Live at a Salesforce at Dreamforce conference. Slack, which was acquired by Salesforce for $27 billion in 2021, has played a starring role at Dreamforce with new platform innovations such as Canvas. For the technology sector, the last 6 months have been pretty rough. In September, the Federal Reserve raised interest rates by 75 basis points for the third time since June. Higher interest rates raised the cost of capital for many tech companies that thrive on new funding to spur growth. Further, with rates on a steeper trajectory, as the Fed indicated on Wednesday, the economy could slow quicker than expected and put pressure on elevated tech supplies. Consequently, tech stocks experienced a fresh round of selling this week. Hmm. Popular tech stocks such as Meta, AMD, Intel, Alphabet, Nvidia, saw declines, and Nasdaq shed more than 5% during this week. So Jerome Power really helps me, like Korean, to get a job, to get a house. I mean, oh well, the thing that he does not just only apply to the states; it applies to Korea because the price of housing also goes down recently. Hmm, in extreme cases, like half of its peak. So Goldman Sachs just lowered its S&P 500 price target. How low it could go? Okay. Mhm. Block stock is beaten up, but some on Wall Street still like it. Block. Okay. Block. Um, Block has had a challenging year, with shares off by more than 60%, but analysts at JP Morgan say the market is falling to recognize the payments company's tremendous earnings power. The banks claim that the market underappreciates the business came after a recent meeting with Block's chief financial officers. The investor relations team left the analysts confident that Block could expand its margins by double digits by 2024. They reaffirmed their overweight rating on the stock, as well as their target of $115 for the price. What do they do? Profile. Tools enable sellers to accept car payments and provide reporting and analytics. Enable sellers to accept car payments and provide reporting and analytics, and next day settlement. It provides hardware products including MagStrap Reader, which enables swap transactions and manage extract codes. Okay. I think they're making some kind of system the store can use. Like when you go to restaurants. Oh, hmm. Block. Okay, and let's read the next article. Okay, we have 6 types of tech stocks that I like right now, and 4 that I'm wary of. Ah, come on! I've reached my free article limit. Dang it. Okay, this is it for today, and I'll see you tomorrow. I did it. To be honest, I didn't intend to do it tonight. I want to do it tomorrow, but then I'm like, just let's just do it for 30 minutes or so. Why not? So I I did turn on a YouTube and then started just YouTube live, but then s there it is, 35 minutes. So okay, I'll see you tomorrow. Okay, bye bye.